You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android, Berry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 21st day of January, 2020. Thanks so much for joining us. Whoever you are, wherever you are, well, we're just glad to have you right here, right now. If you cannot see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, point in the internet connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. Of course, you'll find us streaming live on YouTube, on Facebook, and Twitter as well. All right. Hope you had a great holiday. We have all these holidays at the end of the year. We have Christmas, and then we have the New Year week. And And we have yet another holiday. And now we have a short week. So, 4 trading days. Today's about half done. So we've still got Wednesday, Thursday, and Friday. Let's take a look at the numbers from around the world and just see where the world markets sit right now. Okay. Starting here in the U.S. Currently the Dow down 34 points. NASDAQ up by 1. S&P 500 down 2. And the Russell 2000 down 8. In the commodity basket, crude oil down 25 cents, trading 58.29 last. Gold down $2.80, trading 1557.50 last. In the Asian markets at the close, Nikkei posted a loss of 218 points. Shanghai dropped 43. And the Hang Seng finished the session down 810 points. Now that's almost 3%. And in the European markets at the close, FTSE was down 40, the DAX was up 7, and the CAC was down 32. It gives us a red day in Asia, gives us a mixed day in the UK, and thanks to the NASDAQ, it is still a mixed day here in the US of A. NASDAQ, the only one showing any green on the screen at the moment in US markets. Again, the Dow is down just 34 points, S&P down 2.5, Russell 2000 down 8. So some pretty quiet back from the holiday kind of trading here. Let's jump over to Michael and get a recap of what happened in the live training room this morning. And when he's done, I'll be back and we'll take a look at the Concierge Trade Alerts from last night. And we'll have a chat with John, all that, and answers to your questions. So if you have questions, put them in the chat box. Okay. If you're logged in through the GoTo software on the CFRN site, you will have access to the chat box. If you're logged in via one of the other streaming services that I mentioned, such as Facebook or Twitter or YouTube, you can still communicate by, if you got a question, you could always join us in Telegram. You can email Valerie, support@cfrn.net. You can even call us, 949-42-EMINI. Michael, I see your charts, so if you're ready, it's all yours.
Okay, I am ready. I am ready. Here we go. All right, good afternoon, everyone. If you have not taken a free trial with us and you want to take a good afternoon, everyone. Today is Tuesday, the 21st day of January, 2020. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says 5-day free trial apply.cfrn.net. You can click on that. You can click here. You can click down here. Click on any one of those. It's going to bring you here to eminitrainingschool.com. Now, on this page, all we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to click on that. All right. Now I'm going to go back here. Results. Today, we had pretty good results today. Given that the market was kind of, well, it had a lot of movement in the pre-market. Okay, there was a lot of movement in the pre-market. I have been told that there were some more attacks in Iraq, and a couple other things might have been driving the market in the pre-market. And I'll get into all that in just a few minutes. Okay, but today, as I said, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today's the 21st day of January, 2020. We made 1 tick in the euro, 1 tick in crude, and 15 ticks on gold. That put us at 166 and a quarter on the morning session. And today it took 19 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 9 trades this morning. So on the month now, we're up 1,325. That's over 11 days, averaging 120 per day. And it's the same thing on the year. Okay. Let's minimize that, and we'll go here and look at what we did and didn't do. All right, so on gold. Gold is where we made the most money today. We did trade an equal amount of time on gold and on crude, but we missed a few trades here on gold. All right, we started out right here with a break even. Then we picked up 10 ticks on the second trade. That's where we got the goal for the day. And then I was putting it in my log when this one happened, so I missed that, and I missed that, and that. And then we picked up 5 ticks right there, and we had another break even right there. That was our morning session on gold. Let's see, during the break, see, this is all during the break. There was a shorting opportunity right here during the break, and I missed it. And fortunately, I missed it because it would have stopped out. There was a long opportunity right here that you would still be trying with right now. You'd be looking to get that stop to break even. Now, the entry point would have been at 57.5, and it's gone up to 57.9. So it did go 4 ticks into profit, depending on whether you got in at 57.5 or 57.6. But either way, when we close up above the MA1 right here, you're going to want to bump that stop to break even. Now, it should get up here to dynamic resistance as the green line turns up and gets up into the cycle. That's what it should do. Okay, and by the time I'm done with my recap, we'll see what it has done, because it should have probably done that by that time. On the euro, we picked up 1 tick right here. We missed a short here. We missed a short there. You see how this was going straight down here? The MA1 was just red and going straight down the whole time. And so was the cycle. Okay. Now, I'm sorry we missed these, but it is like watching paint dry, or grass grow, or any other analogy that you can come up with when things go really slow. But in the pre-market, it had some pretty good movement. And then it gave it all back. Crude. Let's see. Now, let me go out to a larger time frame here on the crude, so you can appreciate what's going on. Here at the open last night, well, Sunday night at the open, there was a gap up, and it's now filled that gap, okay, and come down off of there. That's the larger time frame. Now, let's go down to where we live, and there was a break even right there, a break even right there, a +1 right there, a mistrade right there, and right there. Now, both of these probably would have been break evens, and we had a break even right there. Now, during the break, there was a long opportunity right here. Would have given a little bit of profit. A second one, no, I wouldn't have done the second one. No, that was it. There was just 1 trade during the break. Okay, and the ES, I was complaining this morning because these flipped around on me. Hang on, let me remove that. Remove that and put new ones on. I was complaining this morning because it was trading right up against the weekly trading zone, and we didn't have a lot of room in between the zones, but it went up to this zone, bounced back down, almost got to this zone, went back up, came off the zone to the tick, then came back down almost to the zone, and then during the break, it finally penetrated the zone. and started moving up, putting in new all-time highs right here. And so it's kind of stuck there. So that's what you got to be careful about. And that was it for the morning session. Okay, so let me go back to here. This is where I want to go back to. So if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 21st day of January 2020. We made 1 tick in the euro, 1 tick in crude, and 15 ticks in gold to put us at 166.25 on the morning session. Today, we took 19 minutes and 2 trades to get to the goal for the day. And at that point, we're up $100 a contract, and we took a total of 9 trades today. So on the month now, we're up $1,325. That's over 11 days, averaging $120 per day. On the year, we're at $1,325. That's over 11 days, averaging $120 per day. Yeah, for the month of January, it's going to be the same, the monthly and the yearly. If you have not taken the free trial with us, go to the home page, and you can click anywhere that says free 5-day trial on here. You click on that, you can be brought to eminitrainingschool.com. On this page, all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. All right. And that's it. With that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am.
Oh, and I got to send you an email
with
regard to what we talked about last week. Okay, yeah, you can take it back.
All right.
And
here we go.
There it goes.
Spoke to John. John's a little under the weather today, so he won't be joining us. So we're just going to move through these Concierge Trade Alerts pretty quickly here. Guys, if you have any questions, particularly if you are new or if you're on the trial, you got questions, put them in the chat box. The entire audience doesn't see what you type, just myself, Michael, Valerie. I think she's even in a meeting now or something.
Yeah, 12:30. She's got a meeting.
Yeah, so don't be shy. If there's a question, you don't understand something, just ask. And we're more than happy to do our best to give you an answer. Okay. All right, let's look first. Well, let's talk about a little bit of news here. I don't know if you guys are aware. I don't think we've talked about it yet. Bitcoin options. We'll start with futures first. CME open interest for Bitcoin futures up 100% since the start of 2020. Open interest in Bitcoin futures listed on the Chicago Mercantile Exchange have doubled in the first few days of the year. About $235 million worth of positions, which is 5,329 contracts, were open on the CME on January 17th, compared to 110 million seen in early December. Open interest is the sum of all contracts that have not expired, been exercised, or physically delivered. Open interest has spiked alongside price, confirming an upward trend. Bitcoin bottomed out near $6,430 in mid-December. It rose to a 2.5-month high of $9,188 on Sunday. At the time these numbers were put together, the cryptocurrency changed hands at $8,600, representing a 20% gain on a year-to-date basis. Now, the Bitcoin futures market witnessed increased activity in the run-up to the launch of options trading. Open interest rose to more than 5,000 contracts in the first 4 trading days of the week. Further, more than 17,000 contracts, equivalent to over 85,000 Bitcoin, traded on January 8, 5 days before the options product went live, and registered a first-day volume of 2.3 million, or 55 options contracts. Options trading volume more than doubled to 122 contracts on Friday, amounting to a notional volume of 610 Bitcoin, or 5.3 million, as each contract represents 5 Bitcoins. BTC has seen remarkable growth in volume and customer interest, with nearly 2.5 million contracts traded to date and 4.9 thousand plus contracts traded daily. And that's from a tweet put out by the Chicago Mercantile Exchange. Now, they tweeted that back on December 17th. Further, nearly 6,400 futures contracts traded each day, equal to roughly 31,850 individual Bitcoins. The ever-increasing numbers at the CME may reflect rising institutional interest in the cryptocurrency and could accelerate Bitcoin's evolution as a mature asset class. The CME's product has evolved over the last 2 years and is now one of the most liquid listed Bitcoin derivatives available globally. We've seen strong participation from institutional investors, physical Bitcoin traders, and other clients who value the transparency, price discovery, and risk transfer that only a regulated marketplace like the CME Group can offer. Other exchanges also witnessed increased activity over the last few months. Total trading volume rose in futures listed across the globe to well above 25 billion on January 14th. That was the busiest day in the crypto markets since October 26th. Now, we haven't brought up a Bitcoin chart in a while. Now, this platform is purely futures, so what you'll be seeing here is, of course, a futures contract. And I'm going to peek at bar chart real quick and see what they're considering to be the front month. Let me see how they list it. And for those of you that don't know how to do this, I think I showed you last week, but it's worth showing you again just so you know. Cancel that out for a minute and bring this back. Oh, and I forgot to ask about the recap of the recap.
Today it took 19 minutes and 2 trades to get to $100 a contract.
That's great bingo.
Yes.
Okay, so anytime you're curious as to what the front month is for any contract, you can search symbol, or you can select a commodity. Like if maybe you don't know, suddenly you wake up, you got a hankering to trade corn, but you don't know what the front month is. Go to barchart.com, select the commodity, corn, and it will tell you March ZCH 20. That is the front month, as they call it. That's where you'll see the most volume. Over here in the volume column, you can see the March contract for corn. Current volume 127,425. Of course, you've got open interest numbers and a number of other things. But we are going to go to currencies. And at the very top, Bitcoin futures. And that's going to tell us that the current front month the most volume is in January, which is BTF20. And volume 5,371. There's that open interest number. Okay, so now that we've done that little bit of preliminary research, we know the contract that we want to look at is BTCF20. Now they're talking about options, Michael. Have you looked at the options?
Not on the Bitcoin, I haven't.
What's the quickest route to pull up the options thing here?
You go to, hang on, let me do it on my chart. You go to trading on the control panel. Go to trading.
Okay, let me get my control panel.
And option chain and new window.
Guys, when he says control panel, we're referring to this guy right here.
Yeah. Okay. Go to trading, option chain, and new window.
Trading, option chain, new window. Okay.
You have to have it turned on. I don't know if you do.
Well, I don't know if I do. Let's see. So,
yeah, I think you do.
BT.
And you want to change the range to all.
Range to all. Okay, I should be lighting something up over here, shouldn't I?
Yeah. Oh, there it was. You just had it a second ago. There it is.
British pound.
No, that's the pound.
BT. Okay. Then let's do.
Yeah, I don't know what the symbol is for
Let
it.
me do it. Let me do it like this. Okay. All right. So we're just gonna go CME. Bitcoin. Options. Okay. Let's see what they tell us. Bitcoin futures and options on futures. Well, options on Bitcoin futures. Type European. Globex options. So there's the month. Why do you think it says European?
I don't know. I don't know.
Okay. So where do we show? Well, obviously, maybe I should go back to the article. Let's see if it gives me a clue. All right, let's dissect this together and figure it out. Options on Bitcoin futures from the Chicago Mercantile Exchange got off to a good start on Monday. What's the date of this article? That was the 14th. Okay, so that was a week ago today. Correct? Yep. 7 days ago.
Yes. Yes.
Seeing trading volume reach 55 contracts in the opening session. That amounts to a notional volume of 2.3 million or 275 Bitcoin. Each contract is worth 5 individual Bitcoins. And for those maybe that don't know, an options contract, whether you're talking Bitcoin or anything else, is a derivative based on the value of an underlying instrument, in this case, the Bitcoin, that provides the right, but not the obligation, to buy or sell the specified amount of the underlying on or before the expiration date. A call option gives the holder a right to buy, while the put option gives the holder the right to sell. The growth of Bitcoin options is widely being touted as a move in the right direction for the cryptocurrency, as it may boost institutional participation and help Bitcoin evolve into a mature asset class. Institutional trading platform Bakkt, a subsidiary of ICE, Intercontinental Exchange, maybe that's where the Europe part comes in, launched Bitcoin options on December 9th with very little action on the first day. CME's launch day trading volume was nearly double the average daily volume seen on Bakkt since then. Option volumes on the CME may rise rapidly too, as it has a robust liquid underlying futures market. Okay. Open interest. If you see anything that resembles a symbol,
Yeah, I don't see it.
well, let me know. If anyone in the audience holds the key, the answer to that question,
It could be that Gain Capital just doesn't trade that. I mean, it's on the CME, but
yeah, that's you're exactly right. So let's just go to Let's go to CME BTC options. Oh, that was futures quotes. Okay, futures, so I go to options. Okay. So down $245. Volume 5,385. Still don't see a symbol though, do you? I could just be missing it.
no, I don't see it.
I'll accept the cookie. You never turn down a cookie. That's not true. All right, well, we're not going to hang ourselves up on this. We'll just contract specs. Well, maybe that gives you a symbol. Minimum price fluctuation. $5 per Bitcoin, and since there's 5 Bitcoins in a contract, so minimum price fluctuation, $25. And it says everything's BTC. Okay, all right, guys. Well, we'll get it figured out by tomorrow. And let's get that rabbit. Let's see. Come here and go BTC. Tick all. Okay. All right. Well, we do know how to bring up the futures, which is right here. So let's see what it looks like on a daily. And we've got volume down here at the bottom. And all these other miscellaneous lines, we'll just make those vanish. Okay, so this is a daily chart. So January 8th, 16,330 32 contracts traded. And so far today, it's like 5,391 so far. And if we do this, do this, do this. There's our bullish cross on daily chart. Let's see if they give us a BTC. If they give us one of those. They do. Okay. All right. So let's wander back to a year ago. Now, many of you will remember that when the CME announced that they were going to actually come out with a new product, the Bitcoin futures contract, that was by many considered to be, you know, the equivalent to the good housekeeping seal of approval, I suppose. In other words, it's being, you know, officially recognized as a thing. Because the CME, if they're going to go to the trouble and the expense and, you know, all the many things that have to happen for a highly regulated exchange like the CME, for them to come out with a product is a new product is no small task, especially when it's unlike when they rolled out the micro ES, all the indices, the ES, the Dow, the Russell, the NQ. There wasn't so much heavy lifting there, but with the Bitcoin, I mean, we're talking about just a whole nother animal. So I'm going to back right up to January of 2019, see where we were a year ago today. January 21st. Right there. So that's 1 year ago today. All right. Now, you've heard us say many times that everything we do is fluid across all markets, all time frames. Of course, there's the school of thought that says you just can't do that. Each market has its own unique personality and characteristics, and so you can't just trade everything the same way as you do something else. It's just that dog won't hunt. But, well, just a quick primer. Whenever price on any market and on any time frame gets below what we call the BBC, and that just stands for bull, bear, cross. You got to call something. You got to give it a name, a label, so people know what you're referring to. And when price gets below that green line, okay, we anticipate lower prices. That's just as simple and elementary as we know how to make it. Okay. Now, when price gets above that green line, we anticipate higher prices until price gets back below the BBC, and then we anticipate lower prices. Now, this huge drop, price pulls back. We expect it to hold, and by hold, I mean exactly this. Now, yes, we spiked above it, and we closed above it. I mean, right here, we even opened and closed above it. But we didn't get our confirmation. Confirmation is when you actually get that bullish or bearish cross. So here you can clearly see that the red line, the clinical term, the technical term is CFMA1. Again, got to call it something. Now, I will refer to it as red and falling or blue and climbing. That makes it really simple to explain to someone who's brand new without going into a lot of just really complicated, in-depth explanations and formulas and, you know, the stuff that just makes it all seem so complicated. Now, don't get me wrong, trading's not easy, but it can be simple. And part of making it simple is doing away with a lot of the big words and all the stuff that just makes your head spin. It's like, wow, man, there's no way I can. How in the world am I supposed to remember all that? I mean, how many weeks, months, years am I going to have to study to get this? Okay, so what Michael and I did was we worked very hard to try to make something that can be very complicated. We tried to make it really simple. So instead of having to explain, you know, all of these, you know, complicated calculations and so forth and so on, when red and falling is below the green line, this is what we expect. And, you know, I don't know that we'll ever be able to make it any simpler than that. And I might add that, you know, we've stopped trying. And by stop trying, I mean, we're not looking for some way to make that even simpler, because I just don't know that it could. Anything you want to add on that, Michael?
If it ain't broke.
Yeah.
You know the old saying.
So, red and falling, expect lower prices. Price is always going to revert to the mean, and in our case, the mean is the green line that we're talking about. So when price pulls back, we expect it to hit a leg, retracement, a leg, retracement, and a leg, and then a retracement. Now you see this little consolidation here. We've got blue and climbing. Okay, red and falling below the green line, anticipate lower prices. Blue and climbing above the green line, anticipate higher prices. So just as we saw price go leg, retrace, leg, retrace, leg, retrace, the narrative changed here because price held above the BBC. Blue and climbing, this is confirmation, okay, that we, you know, it's on, you know. So leg and a retracement, and a leg and a retracement, and a leg and a retracement. And as long as price stays above the green line, we're going to continue to expect higher prices. Until when? Until the dynamic changes, until the narrative changes. Okay, and so here on May 10th of last year, for whatever particular reason, looks like a weekend there because we go from the 10th to the 13th. So we have a gap, higher open on this day, but then price does exactly what we anticipate price to do, revert to the mean. It held, that held, that held. So off we go for another leg, and then we pull back. And then we get another leg. Goes right back to the BBC. A leg. Now, this is kind of a heads up here, because definition of a trend, higher highs and higher lows. So here's a high and a higher high and another higher high and another higher high. you get the idea. And on the pullback, here's a low, there's a higher low, and then another higher low. Here, after repeatedly putting in higher highs, higher highs, higher highs, we come back, we revert to the mean. Market does a good job putting in another leg, but it's a tall order to fill, because to put in a higher high at this point, price has got to take out that high, and it failed to do that. So that's kind of a first heads up. Perhaps this move's running out of steam. So price pulls back, and we get below, and we get a confirmation here with an actual bearish cross. So we've got, there's a high and then a lower high, and then we've got a low, and then we've got a higher low, and then we have another lower high, followed by another higher low. Now we're up through July. Okay. So whichever direction price moves, whether it's above or below, it's always going to come home. And then when it comes home, that's where the market has to make a decision. Is the next leg going to be to the upside or the downside? And that determination has nothing to do with any indicator, oscillator, algorithm, guru. It has to do with these folks right here. The buyers and sellers in the marketplace. Now those buyers and sellers, they can be men, they can be women, they can be institutions, they can be machines. It could be a server somewhere in a closet in the basement of some office building. It could be someone's iPad at your local Starbucks. Order flow. Okay. Mark Douglas, who you'll hear us talk a lot about Mark on this show. We have for years. Mark was a friend. Mark was also the person that really opened my eyes to the fact that this is a business based on probabilities. And a tip of the hat to Michael, because Michael was one that finally convinced me to go get the doggone book and read it. Because people had been suggesting that I read it for quite some time, but I didn't have any interest in reading it straight away, because I had heard there were no setups. There was no charts. There was no magical indicators or
just read chapter 7.
Mystical oscillators. Yeah, I agree with Michael. The thing that should change everything for you will be found in chapter 7. Chapter 1, chapter 2, it's a little dry, but I promise you, if you read chapter 7, then you're gonna want to read the rest of the book. You're not going to just read it once. You're going to read it, and you're going to reread it. Mark used to frustrate me to no end how he would, when he was writing, he would read me the last paragraph that he had written, which he had been agonizing over for, days, sometimes, honestly, weeks. It sounded perfect to me the first time he read it to me. But I don't think perfectionist is really the right term, but it was so important to him that everyone clearly understand the message that he was trying to get across. And so, along with, first Michael, finally getting me to read it, and then me doing the reading, and then after spending time with Mark and personally learning things from him, I began to understand that there's no magic. There isn't. And there are things that are unknowable. Okay? There are things you cannot know. And people spend, billions. Over the years, people have spent billions of dollars trying to either create that thing that can tell you the unknowable, or create the thing. And you gotta give it up. You gotta give it up, because it's a blind alley. I think I wrote something over the weekend, which I'll just share real quick. I remember in the now, I'm jumping around a little bit, but I think it'll make sense. Remember, it was those people I just showed you, the order flow. That's what determines, is price going to pull back? Is it going to hold? Is it going to put in a new high? Not put in a new high? It's the buyers and sellers that determine that. Okay. If there are more buyers than sellers, price is going up. If there's more sellers than buyers, price is going down. And it's that simple. Okay. But again, most of us can't see that simplicity because we get so much stuff hurled at us every time you open your inbox or click on a link, or there's just more stuff you got to learn. And I don't want to detract from anyone's hard work, their blood, sweat, and tears that they put in trying to, figure this thing out or that thing out. I'm just trying to help you and let you know that you can go that very grueling route, or you can use a simpler approach. Now, price reacts around the BBC much the same as it reacts around a weekly trading zone. Why? Well, because there are important prices, important areas. A minute ago I said important prices, important areas are almost always tested. I don't expect you to just believe me. Okay? How would you know that I'm telling you the truth? Well, there's no way you can until you put it to the test. And I just got to encourage you, no matter where you go, no matter what seminar you attend, how far you travel, how much money you spend, you must question the speaker. Okay? Whether it's me, whether it's Michael. See, we invite questions. We want questions. There's a thing from the 60s. What was it? Question authority. Question everything. You owe it to yourself. If you're going to learn how to trade for a living, or if you're going to learn how to become a consistently profitable trader, then you're going to have to get to the bottom of this. You're going to have to get to the truth. So, weekly trading zones, BBC, or even the trigger on an alert, like a concierge or a logic alert, important price, important area, a decision has to be made. That decision that is made will be based upon the order flow, the buyers and sellers in the marketplace at any given time. So what I wrote over the weekend was just a little scribbling about weekly trading zones. I remember in the early weekly trading zone days, struggling some Sunday nights to force myself not to monkey with the numbers. Now, why was I tempted to monkey with the numbers? Or as I eloquently wrote, why were the monkey shines calling? Well, because it was Sunday night, and here we were already within spitting distance of either the highest or the lowest weekly trading zone for that week. I mean, I haven't even published them yet. I haven't hit the button to publish. And our zones go out to our partners and passport holders every Monday morning, 6:15 a.m. Eastern. Today I was late. I apologize, but sometimes it happens. But my daughter was getting ready to go to school, and I don't know if she was trying to make me nervous on purpose, but she's counting down the seconds. When I hit publish, I still had 15 seconds left on the clock. She knew I was trying to beat the opening bell, and so I did. Okay, so why were monkey shines calling? It was Sunday night, and here we were already within spitting distance of the highest or lowest weekly trading zone for the week. Now, back then, I did not have a 10-year track record to lean on, believe in. All I had was faith in my definable edge, our definable edge. Now, I could have monkeyed with those numbers, and nobody would have ever known the difference, never known the difference, except me. But that's the crux of the apostrophe. I would know. Now, Granny Reeves schooled me in faith, the verb, not the noun. She taught me everything a person needs to know about faith. Years later, Mark Douglas taught me the importance of having a definable edge. He never gave me an edge. He never attempted to give me an edge. He had seen me at work. He had seen my edge at work. He knew I already had everything I needed. See, he knew this, but I didn't. And so, rather than complicate matters, he zeroed in on the very thing I did need, and that was faith in my edge. And you, whoever you are, whether you use our definable edge, time tested, by thousands of traders, if you don't have faith in the edge, you don't have an edge. That's part of the edge, is having faith in the edge. Now, much like the Middle East, which has been locked in a never-ending battle since Genesis, I was locked in the never-ending hunt. The hunt for excellence, the hunt for perfection. You know the drill. Maybe you're still caught up in that. Now, I was not an easy patient, but Mark was patient, and God was patient. And this temptation to monkey was not a one-time affair. But every time I resisted the urge to tamper, the simpler it got to resist the urge to tamper. I'm writing this because if you have access to this discussion, I know, and I was writing this in the members only discussion group. I'm writing this because if you have access to this discussion, I know that you have what you need. Period. It's not a sales pitch, because you already, and again, I'm talking to our members. You already own it, all of it, everything you need. This month, and I know I'm 2 weeks late, sorry, it's been a crazy month, but the highest monthly trading zone this week, or this month, for the S&P is 3360. I'll get back to Bitcoin in a second. Now, as I was typing last night, we'd already printed 3330. Go back to that. Yeah, so we'd already printed 3330 here. Now, the month opened January 1st. Go. So here's January 1st. January 1st, the market opened 6 p.m. Eastern, 32.37. So on that day, to say that the highest weekly trading zone for the month would be 33.60 slash 65, you wouldn't even bat an eye, because that's way the heck up there, as they say. But seeing as how I just got around to printing it last night, it would have been tempting to monkey because, well, we're at 30. We're only talking another 30 points further overhead. Now, the number would be the same, as long as I don't monkey with it, the number would be the same whether I published it January 1st or today or January 31st. The number is the number because I don't monkey with the number. If I were to monkey with the number, that would be akin to flushing 10 years down the toilet. I understand if I monkey with the numbers, even if it turns out to be the right thing in hindsight, I create a crack in my foundation, a fissure that over time will spread, spider, and eventually become another, and I eventually become another statistic. I become one of the 9, not the 1 of the 10. And that's what we're all striving for here. We're all striving to be the 1 out of 10 because, sadly, we know that 9 out of 10 new traders fail. And they fail simply because they have no one to teach them how to do this. I won't go into the airplanes and the plumbing, but in real life, you know, we don't attempt to do really important things if we don't know how. I mean, yes, a person can be self-taught at anything, but why not just have somebody teach you? I mean, if there's a teacher available, wouldn't that be the simpler way? Remember, it's never going to be easy, but it can be simple. So I ended the little missive with, so where are you tonight? Are you on track? Or are you still on the hunt? Because as long as you're on the hunt, you're never going to become the consistently profitable trader that you're working so hard to become. You think about how much time you spent and how much money you've spent. Nothing changes until something changes. So you have to decide. It's up to you. Now, Michael and I aren't the only people that teach other people how to trade Emini Futures. Finding, you know, a real teacher, someone that actually invests time in you. Now, we get paid for what we do. I mean, we're not a charity here. This is a business, okay? But if you're going to learn, and if you want to save years and tens of thousands of dollars groping around in the darkness, if it's not us, find somebody that has a flashlight, somebody that can show you the way. Now, let me go back to that chart. Again, whether you hang your hat with us or not, if you can understand this simplicity, we expect price to go lower and then higher, then lower and then higher. We're up through October of last year. Okay? And this brings us right up to where we are today. Bitcoin futures. We don't have the ability to tell the future. No one does. I don't care how slick the ad copy is, how convincing, how compelling it is. Okay? God didn't create humanity, mankind, Adam, with the ability to know the future. Now, he did give us a brain. Some of us use it, so some of us should use it more. There's times when I know I should use it more. But we can know what the next high probability move is. Now, there's a world of difference between knowing what the next high probability move is and knowing what the next move is. And that's where a lot of traders get hung up, because they're so close, man. They're just one mouse click away from greatness. And, man, just one more filter, one more thing, and it'll put you over the top and you'll never look back. Man, I wish that were true, possible. I wish I could offer you that, but I can't, okay? But this is Bitcoin futures on a daily, okay? If I put on a 30-minute chart, what's it going to do? It's going to give me the same information. I can scroll back to whenever. It's going to do what it always does. Prices above, expect higher prices until it gets below. Expect lower prices until it gets back above. Okay. Now, what do you see up here? It's called resistance. You know that. Some people will try to convince you that, that's old school, that's old fashioned. Dude, we live in a world of algorithms now and high-powered computers and all that jazz. You can't use, that's just creepy that you're trying to use support resistance. But price will move higher until no one is willing to pay the next rung on the ladder. And price is going to drop until somebody steps up to the plate and says, I'll buy that. Okay? What do you got here? If I drag this over. So what did we do? We went from resistance to support to resistance to support to resistance. Back to support. Now, let me caution you. Anyone can look like a genius with a historical chart. But since I don't know the future, I can't show you a futuristic chart. I can only work with what I have in front of me. Okay? But I'm just trying to paint a super simple picture. If we know that price is going to trade between support and resistance, always and forever, when price is above the BBC, we know that the next high probability move is a run at resistance. And when price gets below, well, the high probability move is a run at support. Back to resistance, back to support. So we did a 30 minutes, we did well, let's just do something wacky we haven't done in a long time. I'll pick a number, Dwayne. 50. Now the volume numbers down here are going to be consistent because what I'm measuring is volume. Okay? 50 contracts. So in a 5-minute chart, you get a new candle every 5 minutes. Hourly, daily. Every day you're going to get a new, even if price doesn't move a tick. When the clock rolls over and it's a new day, or the calendar rolls over and it's a new day, well, you're going to get another candle, no matter what price is done. We use a range chart in the morning. Michael teaches you He teaches you our core methodology on the range chart. We don't know when we're going to get the next candle, but we know where. And I'll leave that explanation to him. He does that much better. So the next time he's talking, he can go over that with you. And you're welcome to pipe in here at any moment if you want, if you're still there. I don't know if you're on a call or not. So I switched this out to a volume chart just so that you could see. No matter the time frame, no matter how the clock on the wall is always price. No matter what market, no matter what time frame. Okay? So do we still go from support to resistance back to support? We do. We always have. We always will. So currently, right now, on a 30-minute chart of Bitcoin futures, we're just consolidating, building a base, as some would call it. Okay. Now, this is a pretty good gap to the downside. BTC. Is it a long 87.90? 87.90 up to 88.90. You can do that with any chart, with any market. And we can teach you how to do that. It's kind of what we do. Okay. So let's run through the Concierge Trade Alerts from last night. We have two alert services, Concierge and the Logic. Concierge is based on previous price behavior. Logic is based on current price behavior. Both are dealing with important prices in important areas. Now, when they both point at the same important price, important area at the same time, that almost always deserves a second look. So I'm going to give you an opportunity, if you'd like, to grab a screenshot of the alerts that went out last night. Got them out at 7:15 p.m. Eastern. We've done the same 8 markets on the Concierge for years. S&P, Dow, Russell, Crude, NQ, bonds, 30-year bonds, gold, soybeans. Okay. All right, so let's go to the S&P chart first. Okay. By the way, these are this week's zones. Since we got a short week and I was working on them, I decided to just, typically I don't give out the weekly trading zones to the entire audience until Thursday. They are, property of the partners, members, passport holders. So everybody in the audience gets a treat this week. Okay. Now, when price approaches a zone from below, we expect it to be good resistance till it isn't. And when price approaches a zone from above, we expect it to be good support till it isn't. Only 3 things can happen when price approaches a weekly zone. The most likely thing, the one you'll see over and over, is consolidation. Second most likely, rejection. Now this candle opened right here. These are 30-minute candles. It was a big red candle. Came all the way down to the zone. Found support, as we expect. which sent it back up to where it opened. And by the time the 30-minute period was up, we actually had a red candle turned into a green candle. Price was rejected at the zone. Price was rejected at the zone right there. And right there. And right there. Okay. More consolidation. The third and least likely thing, but it happens, it's called the slice. Okay. Now, looking for, it's the least likely, so I got to hunt. I'll have to use this one because I don't have a better one. Oh wait, no, I do. I have a perfect one. Okay, so price is at the zone, consolidates. Okay, decision time based on order flow, buyers and sellers. Are there enough buyers to take us to the zone overhead? Or are the sellers going to take us to the zone below? Not only did the order flow, buyers and sellers, take us to that zone below, they took us through it. We sliced through it like it wasn't even there. When that happens, what we expect, see, coming down, we expect it to be good support. But since it failed to be good support, now we need to know, well, is it going to be good resistance? So we push through, we retrace right back up to the zone. The swing high was 33.1575, so it missed touching it by one tick. So we slice through, we pull back, we confirm good resistance, and then that sends us down to the zone below. Zones are an area. Sometimes you'll have a near miss like this. Okay. Now, when price can't trade any lower, remember the talk about, you know, price trades between support and resistance. Okay, so it finds support, which sends it back to resistance, finds support, resistance, consolidation, sends it to the zone overhead, it sends it back to the zone below, which sends it back to the zone overhead, which then sends it to the zone overhead. Now, this one's sliced, but the reason I was saying that isn't a perfect example is because, well, these 30-minute candles, you know, we tagged it on each one of those, but then on this candle we did slice, and so when that move runs out of steam, we expect price to pull back to the zone that it sliced through. And since it failed to be good resistance, the question now is it going to be good support? And if it does turn out to be good support, then we have a move on tap. Take us back to the zone at 33.30/31. Okay. So they went out last night, the Concierge Alerts. Now, these are weekly zones. Once these are published, they're carved in stone. We don't change them, massage them, manipulate them. They're there for the week. Okay? And price will continue to do this same thing that it's been doing for years. We just had our 10-year anniversary since the first time we published the weekly zones. Last night's Concierge Trade Alert, if you didn't grab a screenshot, I'll just show it to you one more time. Consider being long 33.29 and 33.29. It's right there. Yeah, 33.29, and the swing high was only 33.29.75. Remember I said that we're transparent in what we do? Okay. I didn't have to drag this out, but it's the truth about trading. I mean, this happens. With me? Okay. You may not always like what we say, but we're always going to just tell you the truth. Now, the reverse side was consider being short 33.17 if the opportunity presents. Now, again, the alerts went out last night at 7:15 p.m. Eastern, so that's going to be the 1900 candle. There's 1900. There's 1930. Okay. So it was in the life of this candle that we triggered 33.17. I had not done the zones last night. I had not completed the zones. I had all the preliminary work done, but I hadn't finalized, and that's part of why I was late this morning. Okay, but from 33.17, the initial move down took us to 33.12.5, which sent us important prices, important areas, almost always tested. We didn't quite get back to 17. And then we dropped again to the zone below, 0708. So from 17, we'll just look at the first swing low. We'll call it 33.09 to be conservative. So that's an 8-point move in the S&P. Now, no matter where you go on the internet, if you're looking into learning how to trade the S&P 500 Emini Futures, you're always going to hear about the magic of 2 points a day. Okay? It's not magic. There is no magic. Sorry. Little boy and all of us wants there to be magic, but you got to get your magic elsewhere because there's no magic in the markets. All right, so this is a $400 per contract move. Now, you hear all this stuff about, yeah, 2 points a day, man, just you get 2 points a day, that's $100, man, trade 100 contracts, or 10. Now, I laughed, but we've had a guest on the show, and I just talked about him last week, so I won't go into that story again, but there's people out there who trade more contracts than probably you and I will ever consider. Not just hundreds, but thousands. It's a true story. Yeah, you can vet it. You can check it out. It's a real thing. Most of the discussions, though, you get a couple guys in a chat room, and they're talking about the latest strategy, the latest hot indicator, or whatever it might be. And the conversation comes to that 2 points, and almost without fail, I mean, some of these threads grow to like hundreds of pages for everybody putting in their 2 cents. But it almost always ends with, yeah, but is anybody actually doing it? Ooh, that's where the rubber meets the road. So that's why I always invite you to, if you're new, why in the heck should you believe us? You don't know us. Go look at the track record. Go look at this recap I'm doing right now. We've been doing this recap every day for years, and there's the video and the audio and all that stuff. So you don't have to take our word for it. Just go look, okay? if you want trading to be really complicated and hard, it can be. If you want to go a different route and, find simple, we can help you find simple. It's just really a choice. As in all things in life, it's a choice. So, if you got short, as the alert said at 33.17, and you stayed with it all the way to the swing low, that would be $400 per contract traded. But getting out at swing lows or swing highs can be tricky, right? Because you don't know until after the fact what it's going to be. Here's a market truth, but don't take my word for it. Go prove it to yourself. When a move begins to run out of steam, an extended move like this, and when price drops from really 23, is that a 13-point move basically? Yeah, 13, 14-point move, the whole deal. As it runs out of steam, it'll start to walk sideways. Now, this little black squiggly line, okay, it's called a step line. When that thing crosses on a short trade, when that crosses red and falling, we're waiting for the first green candle to close above it. And that price was 33.1175. We call that our exit signal. Now, could you have just gotten out with your 2 points? Sure, absolutely. Or you can wait for the exit signal. You're in a move. You got the wind at your back. Now this candle was green at one point. Okay. That to make you nervous. When this was a full green candle, boy, getting out down here was looking pretty attractive. Hang for me 1 second. Okay. All right. Exit signal. So now, based upon that information from 33.17 to 33.1175, let's just round that up to be conservative. It's 33.12. So from 17 to 12 is 5 points. Okay. So the next time you see one of those threads where everybody's talking about the 2 points, oh, get the 2 points, and then somebody throws out that question, yeah, but does anybody ever actually do it? Well, point them to youtube.com/CFRN. Now what's happening here? Price got rejected. We pulled back to the BBC. What do we expect to happen right here? We expect it to hold. Why? Because it holds more often than it doesn't. Does that mean it's going to hold? No. But that's the high probability thing. So currently price is at 33.20. So high probability move from here. Once we have evidence that it's holding. See, we don't have evidence it's holding yet. This candle is only has 7 minutes under its belt so far. Well, what if it just rips right through it and goes all the way to the zone below? Well, okay. There'll certainly be another trade that comes along. All right. I got to whip through the rest of these. On the Dow last night, we said to consider being long. 9,325, never triggered. And we said to consider being short if the opportunity presented. 29,245. 29,245. So, we're going to back this up because it was this candle where the alert came out. Okay. And again, the number 29245. Now, what special skill set do you need to participate in a move like this? You got to be able to use a computer. You need a basic understanding of what you're doing. I mean, we accept students at all levels. Guys have been getting beat up for 10 years. You know, they're welcome at our house. Brand new, not even sure, you know, what a candlestick is good for other than when the power goes out. Yeah, we love you just the same. Okay. We'll meet you wherever you are on your journey up Trader Mountain and do our best to help. And I don't know if I mentioned this or not, but we get paid to do that. Okay. We don't shuck and jive. That's nonsense out there about, yeah, you know, God's been good to me. I just want to give back. Well, God has been good to us. And who doesn't like helping somebody? I mean, whether it's the little old lady across the street or, you know, whatever. I mean, it's part of the human condition. Unless you're just mean and evil or something. So, we get paid to do this, okay? We actually get paid pretty well. But you know what? Everybody gets more than what they paid for. I promise you that. Now, you can go out, you can read reviews all over the internet. You can, and you never know if it comes from a review farm or from the owner of the website or from a disgruntled competitor because you're stealing their market share. You don't know. That's the problem with reviews. So, yeah, we got reviews. We got them on our website, got them on Facebook, got them on Google, got them any place you can get reviews. We got them out there. But I don't want to insult you by saying you should just trust some message from some person that you don't know. How do you know how do you know I didn't pay them to say that? We have a Telegram channel where you can actually talk to our students, our family members, people who've gone through our training. They own our indicator set. They've sat through our workshops. They've sat through our live training classes. We train live every day, 2 hours, Monday through Friday. So, if you have questions, you can, of course, book a session with Michael and I. Obviously, we're only going to say good things about ourselves. Or you can get a hold of Valerie at 949-42-EMINI. She'll hook you up with the trial. She'll hook you up with the Telegram channel where, you know, you can talk to some of the people who've been with us for years. Okay. All right. So from 29 to 45, I just want to get that out of the way because it always crops up. Well, if you can do this, then why do you waste your time on knuckleheads like me, you know, when you could just be making money? Well, let's face it, I'm going to do the work either way, right? Have I discovered a way to get paid twice for doing the same thing? Yeah. Does that make me terribly clever? No. It's called multiple income streams. Go read any book by any of the generationally wealthy, the Trumps, the Rockefellers. They tell you right there. One of the keys to creating wealth, you know, not just drawing a paycheck, but wealth, is to have multiple income streams. Because you never know what's going to happen, right? Okay. Important prices, important areas, almost always tested. So from 29,245, we go down to 160. So 160, 240, that's about 80. That's about $400 per contract traded. And there's the exit signal right there. Move ran out of steam. Step line crossed over. So the exit price, 29179. Okay. Price gets back above the trigger. Gives us another nice little drop down to 191. And then it gets back above the trigger. And now it's in the process of doing it again. Okay. Now, notice what happened. See how this just fell away, right? There were no obstacles in its path. Different story here. Okay. Why didn't this just fall away? Because it ran into support. BBC. Does that mean that's not tradable? No. Just means this is a higher probability trade than this. But they both ended up on a positive note. And even this one, okay, I would have been most hesitant of this one because from the trigger to the BBC, I don't have a lot of room to run. Okay. All right, Russell. Do the Russell. I commented last night in the discussion group that the Russell was either horribly out of sync with the rest of the market or it was leading to the downside. It looks like it was leading to the downside. On the Russell last night, the alert said to consider being short 1697. That's right there. 1697. And the swing low. Well, you know what? Because we've got an exit signal here, so let's do it this way. Exit signal 1693. 1693. Okay. That's the exit signal, right? Right there. So from 97 to 63, that's 14. Alexa, 14 times 50.
14 times 50 is 700.
It's a $700 per contract move. Okay. And in this case, we never got back above the trigger. Okay. All right. NQ. On the NQ last night, consider being short 91.53. Okay. And the swing low was 21. So that's a $600 per contract move. $600 per contract move. Okay. Now we got back above the trigger here, and we're just now triggering. But see the problem? The difference here and here is on this trigger, you're running right into support, right? So I'm not anxious to be a part of that. Crude. Last night on crude, we said to consider being short 58.65. 58.65. And that happened right there. Because it was in the 1900-hour candle that the alert came out. Okay. So from 58.65 to the zone below, it's 25 points. It's $250 per contract traded. But it kept going. From 58.65 to the exit signal right here. That's 58.02. Call it $58. That's basically a $600 per contract move. We just got back above the trigger and it's ready to do it again. And last but not least, last night on gold, we said to consider being short. 15.55. Okay, the first drop took us to 52.5, so $250 per contract move. Then back above the trigger, $300 per contract move, back above the trigger. Now see, I'm still okay with this one because we're still red and falling here. Okay. So from, what was it, 15.55? Yeah, 15.55 to 46. That's a $900 per contract move. True story. $900 per contract move. Okay. All right, guys, I'm going to wrap it there. If you're new, this is what we do each and every day. I encourage you, go to youtube.com/CFRN. Go back a week, go back a month, go back 2 years. Go back 2 years, 3 weeks, and a day. Pull out the recap, and you'll hear me, you'll see me use the same words, the same principle, the same everything. Everything I just said and did, that's what I was doing. Because as Michael said earlier, if it's not broke, don't fix it. Okay? You can make it as complicated as you want to make it, or you can let it be as simple as you can let it be. If it were easy, everybody would do it. It's not easy, but it can be simple. Good word for the day. Stand by. Tim said, Doji, not an exit candle. Which one were we talking about, Tim? Let me take a look at it. I usually look for a green body or a red body. If what you're saying is if where the exit signal could be, I mean, if it ends up being a doji with no color, you know, you can go either way with it if you want. Okay, God's word, you believe it or you don't. Jeremiah 1:12 says, I am ready to perform my word. When you are facing danger, the psalmist said, this I declare about the Lord. He alone is my refuge, my place of safety, my God, and I trust him. For he will rescue you from every trap and protect you from deadly disease. He will cover you with his feathers. He will shelter you with his wings. His faithful promises are your armor and protection. Do not be afraid of the terrors of the night, nor the arrow that flies in the day. Do not dread the disease that stalks in the darkness, nor the disaster that strikes at midday. Though 1,000 fall at your side, though 10,000 are dying all around you, these evils will not touch you if you make the Lord your refuge. If you make the Most High your shelter, no evil will conquer you, no plague will come near your home, for he will order his angels to protect you wherever you go. They will hold you up, so you won't even hurt your foot on a stone. The word says, I will rescue those who love me. I will protect those who trust in my name. When they call on me, I will answer. I will be with them in trouble. I will rescue and honor them. I will reward them with a long life and give them my salvation. That's Psalm 91, 2 through 16. Now, note the phrase, "This I declare about the Lord." You see, friend, when you speak God's word over your life, you release the power contained in it. It's not just words on a page. No. I just want to encourage you today. Stand firm. Stand firm. Expect God to honor his word. He's not a man that he would lie. You know, just like these charts we were just talking about. Okay? When price pulls up, what happens? I expect price to find good resistance. And it did. So, see, stand firm. Now, I'm a man, so see, I expect it to hold, but I know that sometimes it won't. I expect this to hold. It looks dark right now. That's a big red candle, man. But until proven otherwise, I expect it to hold. But you see, I'm just some guy on the internet talking to you about the markets. What I just read you from the Bible is the inspired word of God, the creator of the heavens and the earth, the one that hung the stars. Big difference. Big difference. Stand on his word. Believe it. That's our good word for the day. Thanks for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.